All right, good morning, everybody. Nice to see you all. I'm going to say these. I'm not coaching on a daily basis, so once a month webinar for me feel a little bit rusty. But how's everybody doing? These are good, thanks, Fred. Yeah, all's well. All right, guys. So today, as per usual, it's an open forum here. I mean, I have a loose sort of plan in mind as to what I'd like to talk about. But really, it's open to whatever floats your boat. I'd like to get through sort of something close to what I had in mind, and then we'll see how it goes. The thing is, okay, so let me remark on the manipulated market remark. Here's the thing, guys. Even let's say hypothetically that the market is massively manipulated, and there is this all-encompassing body that has the ability to manipulate the biggest, most liquid market in the world. Right? And let's just say that they can do this at a whim, very easily, day in and day out. Does this change anything? Does it change anything? No. Nope. No. This is the pond. This is the pond that we're going to swim in. It may have sharks. It may have moray eels. It may have, I don't know, very ugly looking things with lights on their head. It doesn't change anything. So I will say this, is that the matrix is the matrix. All right? So we just got to swim with it. Figure that out and go with it. So, you know, I hear this so much. The market's manipulated. It's just, we've got no control. Well, yeah, we've never had control over it. When you put on a trade, you know, you're at the mercy of it. You're at the mercy of the current. You know what I mean? You're not really in control anymore. So, that's it. You can just try to kind of swim with them. Swim in their own little pond. Maybe try to avoid them at times. But, you know, we've got to try to maintain the limited amount of control that we have. And what is that ultimately? The limited amount of control that we have is the ability not to trade, right? That's still our choice. And the ability to know where to trade, that's still our choice. And how much to trade. And how much risk we're willing to assume in certain situations. That's at our discretion. So, you know, we still have a limited amount of control. So let's say hypothetically that it is massively manipulated. It doesn't really change anything. Now, is it manipulated? I'm sure. But my care factor, 0. Do I wish that I could move things about? Yes. But it doesn't change anything. Okay? All right, so today I want to talk about, I don't know. I mean, I've heard statistics, but it takes about, you got to remember though, that, you know, they talk about Forex volume being $3 trillion a day or something. But I think when it's broken down, and this is a loose figure, I actually heard this at the International Traders Conference back last year. Somebody was throwing out the number, Mr. Olson from Oanda, he was throwing out the number that it takes about $3 million per second to move the euro. So take that for whatever it's worth. You know, who knows? Anyway, so that's my 2 cents on that. It's just, you know, hey, this is the pool that we're in. Let's just roll with it. All right. So the purpose of today's webinar, I wanted to talk about trading with the session, trading with the session direction, and the importance of that, and maybe trying to how to, and sort of some insight as to how to determine that. All right, now this can be the direction for the week, the direction for the month, or the direction for the day, or the direction for that particular session. All right. So this is important to day traders as well as it is swing traders, etc. When you got to figure that despite the overall trend, still the most important thing in investing / trading is buy low and sell high. Agreed? So in principle every day, and this is such an abstract sort of concept, isn't it? Because and it's a moving target concept. All right, it's one of those things where if you use a golf analogy, people say you need your swing to be on plane. What does it mean exactly? When you're in the act of it, it seems easy when you look at it. It seems easy when you look at it, on a professional level, on a video or something, but it's difficult to do in the moment. Well, yeah, I mean, when I say buy low, sell high, one's typically unlikely to buy directly at the bottom and sell absolutely at the top. You can try to get as close as you can to that, but it's unlikely. It's unlikely that you're going to crack that every time. All right, so that is the question for us then, is what constitutes buying low and selling high? All right, so there's a couple of ways for us to think about this. All right, one of them is, okay, so before I get on to that, I want you to keep in mind that each trading session has a typical direction that they'd like to trade it. Okay, so yes, you will get those sessions where where Asia goes one way, London will go another, and then New York will do something different. Or the beginning of New York will do something, and then the middle of New York will do something different. Okay? But typically, I know for myself is when I'm trading, I might have a direction in mind just for London, or a direction in mind just for New York. All right? Because you've got to remember that there's sort of this, if you're a London trader, all right, and just work with me here for a minute. If you're a London trader, let's say you're doing your analysis for London, all right, and you tootle into the office. You wake up, 4:35, get into the office around 6:37, all right. What would be, and you're looking to put on trades for that particular day, what would be the very first thing that you looked at? Don't worry about news. None of that stuff. There you go. What did the other guys do? I mean, it's natural. I just took a little nap before this, and I came and sat at the computer, and what's the first thing I do? Oh, what's New York done? Right? And if you're a London trader, you're doing the same sort of thing when you get to the desk saying, hey, what did Asia do? What did late New York do? Because chances are you went at your desk. Hey, what did late New York do? What did Asia do? And if you're a New York trader, you're sitting saying, what did London do? And then your next direct inclination is, can I do that? Right? At least that's always mine. I'm saying, well, I want to do what they did. I want to be a sheep. I've got no interest in being a contrarian unless unnecessarily. So I look at it saying, well, is it possible to buy low within the context of that little rise? Or is it possible to sell high within the context of that little drop? Okay, so that is my initial inclination just by sitting at the charts. Now that's important too, and I'll address that. What I'm saying is that one's initial interpretation, one's initial impression of things, in my mind, is what have the other guys done? And then the next sort of natural inclination is, I want to do what they did. Right? I'm not sure. I don't really sit. I probably sit at the desk. When I'm looking at things, maybe 25% of the time, a quarter of the time, I'm saying, well, I'm looking to go the other way today. And it's got a lot to do with longer term resistance or support, etc. Okay? Now, if I show you something like this, this is, I'll just scroll across here a second. Okay, this is pound dollar, and I've just overlaid pivots in here. But we can go to any point of the map here. Okay. And what I wanted to show you is, one, just how choppy London has been for some reason for a long period of time. Okay, but really what I want to show you is how typically a session has a prescribed direction to it. So here, the Asian session is in pink, the London session is in yellow, and we'll use euro for this discussion. And New York session is in blue. Okay, so 8 a.m. London is when this yellow begins. All right, and that's essentially what we're going to talk about. And then obviously the opening of the stock market in New York is the beginning of the New York session. All right, now look at how many times. And I've just taken, this is, I don't know, end of June into July, and we'll scroll it across June. So I'm not just picking a happy stretch on the chart. But notice how many times London open, or the first hour of London here, is the high or the low for that particular session. These are 30-minute candles. Okay, that doesn't always mean, here we, right at the beginning of London, it kind of dropped down, and in the first hour it found a low. Okay, and incidentally, oh look, it's, support. But take note of just how many times the beginning of the London session proves to be the high or the low. Okay, and the same thing can be said for New York. It may not be the first candle, may not be the second candle, but within the first hour and a half of that hour and a quarter of that session, generally the direction of that session is established. Okay? And this is what I wanted to show you. Look at New York. Is it the best idea in the world to try and go against that direction? Right? So Borky's question is, well, what about the longer term trend? And it's a good question. I can just cruise through it a little bit. And I will say that the London session in particular over the last 2 years, to be honest, has been a little bit more wishy-washy than I've ever seen it. Why is that? I don't know. But it doesn't hold the same sort of committed direction that it used to. All right. When I started trading, and not the nostalgia card here, but you could pick a London direction and just kind of ride that for maybe in New York as well. And I don't see very many days. I don't know about you. I don't see very many days where the move is started by London and continued by New York. And I think that's a testament to the fact that the market is in a state of mass confusion right now. And it's week versus week, and it's all very news sensitive. It's very information sensitive. So there's no real longer-term prevailing trend whatsoever. All right, but that's for a different discussion. And as a result, more than ever, just support and resistance and time of day is proving to be a big deal. Okay, now. Okay, so we'll pick a chart here. And, in this case, right, so here's a little daily chart. So what would you say is the daily trend here? For starters, let's isolate it a little bit. Let me change the word trend to, what do you think is the daily move right now? It's up. Which incidentally, 2 months ago, remember us doing this webinar. You guys recall this webinar? For the euro. We were sitting, this is a weekly chart. And we were over here. And we said, hey, it's going to go to about 33, come down to 27, and then rise. So it went up to 33, down to 27, and now we're on the rise. So are we, so we're actually sitting right here. Yeah, not ready, Dave. Thank you. Same for Swissy. Anyway, I thought you guys might be interested in that one, since we looked at that together. All right, long time ago, 2 months ago. Okay, so let's go back to our little pound. Yeah, I'm going to draw to a point in a sec. So our daily trend, I would say, is a range, but our daily move, I would say, is up. You think that's fair? Okay. Now we are coming up to a decent resistance spot where we're likely to do kind of something like this, right? So a little correction in the pound is likely in the next 48 hours from around sort of 54.20 to 54.50. So we're going to expect that based on the daily resistance. All right. But then if we narrow this down a little bit, what would we consider in the based on that logic, what would we consider as it could go higher? But if I said to what would we consider to be low, I think we've got to start looking at this sort of thing. Resistance, 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 support. It's also, if you're a fib user, fib of this rise. So, would we say that that is sort of a buy low area? Would we be on board with that? Sure. Right. Okay, so do a little green zone there. Right. And where would we say would be, in all likelihood, our sell high area? And through here. Right, and what's that based on? Well, 54.45 is weekly R2. So if you're a pivot user, you got weekly resistance up there. It also so happens to be this previous swing high. Big hesitation zone. It's the 5400 area. And frankly, price has been going up, basically vertical for 600 pips. Okay. So I'm cool with that being resistance for multiple reasons. It's also, if it peaks up a little bit higher, it's going to be into this little resistance zone here too. So I'm okay with that being a resistance zone for now, for 4 hours. All right, so at the moment, we're kind of sitting right in the middle of that. All right. So now, what happens if, going to an hourly chart, we roll into the market tomorrow, and let's say hypothetically that New York, Asia does this. And we are sitting here, London Open. Okay? Does that mean necessarily that it's automatically short? Possibly, but not necessarily. But now, said differently, would you buy it here? Not so much. Probably not, right? Okay. You would look for signs that it's going to roll over, probably. And if it just blazed through this area, well, then you should have been good enough, frankly, to get in it, like, down here. Yeah. Okay, like any one of these 17 opportunities down here, maybe that was a buy opportunity. It's higher now. Okay, so let's say that in the first hour of London, it comes in, you start to see hourly stochastics roll over, and you see this sort of thing start to develop. Like a big kind of plateauing here. It's a pretty good sign that you're not the only one thinking that this is resistance. Maybe take a shot there. Okay, and off it comes. All right. Now let's say that this is New York Open here. New York Open here. It is now in the green zone of this swing rise here from this. Okay. Plus it's at this resistance. Is it likely that New York is going to want to short it there specifically? Probably not. Or said differently, even if they do, this isn't a good place for you to short. Now your central pivot's pretty through here now. So now, in the context of this down move, because we know that we're probably on our way to the support based on that resistance, where would sell high be in the context of this? It would be kind of through here. All right, that would be sell high. So if this is New York Open, do we believe an up move? Let's say they start to buy it initially. No, we don't. Because it's coming off mega resistance and your chart's going to look like this. Yes, stochastic user. Alright, it's going to look like that. So when this starts to move back, this will kind of kink over here. And then want to do this. You're going to get kind of something like this going on. And so the little pattern continues. Does this make sense? So you're taking a longer term LT, longer term support and resistance, okay, and the direction within the context of that, is there any resistance between, point A and point B? Yes or no? If there's not, well then price is likely just to continue up. That doesn't mean you necessarily want to buy it at that point. Okay, but then, buy low might be a little swing over this area, or, oh look, it's going to come off the previous swing high, which also happens to be the daily central pivot. All right, I think that's a good area to get long. All right. And then there's some times where you just don't want to do anything because you're just sitting, you're just sitting in the middle of no man's land. All right. Does this sort of thing that I just illustrated here make sense to you? It's pretty quiet. I'm assuming that it went over some heads. That's logical, right? So the same thing could be said for for the longer term stuff. So let's look at the pound and say, right, well, we'll go to the 4 hour here. Actually, we'll go to the daily. So where would be a quick area, where would be a zone where we think that the pound is going to rise? Well, I've illustrated. Let's go to the euro. Okay, so here's our euro chart. It's the same sort of thing. I mean, one can see visually here that this is resistance. There's no rocket surgery points here, right? Swing high, swing low, swing high. Is it likely that that area is going to repel price here? I think so. I think that's a fair assessment. I think we've got to anticipate it. Up until that point, euro is probably going to nudge up there. Okay, so we can do the same sort of thing here. Now, where would be a likely zone where the euro wants to rise? Well, seems like this is important. So I would think that that's going to be important again. So we'll call that 131. So red zone would be here. Green zone here. I mean, I think that's fair. Well, you can trade in between, but it needs to be in the direction of the prevailing move until you've hit resistance unless something changes. But you want to make you see, this is all in between is all spot trading. At the peripheries are all swing trading opportunities. So in other words, I had kind of something like this in mind for the euro. Red, green. Why is it green? Well, it was resistance, resistance, support, resistance, resistance, support, 31 strike level, weekly central pivot at 3104. So that looks low, that looks high. All right, the stuff you do in between is going to be spot trading. It's, is the prevailing move, this way or this way, and where am I within the context of that? Let's say that, if you're looking at this as one move, we are 80% of the way there. So it's becoming more and more and more and more skinny. The spot trade, I'm talking about a 40 pip trade. It's done in 2-3 hours. Yeah. If it doesn't respect my zones, then I try not to trade or I lose money. But you can use, tend to try to use price action around those zones with time of day to filter out what can hurt you. It's not always possible, obviously, but that's part of it. And then also use a lot of cross-currency correlation. So, nowadays if you're gonna trade, let me run through this scenario and then I'll elaborate on that. Okay, so now let's use this. So let's say that the euro now in Asia, it'll go to the hourly. Okay, we'll get our principal zones going here again. Red. Green. Okay, so now let's say New York and Asia, we do this. So if the Asia takes us up here, and we log in as London traders at say 6 a.m. tomorrow, and we've got price up here. Okay, you're going to have your daily central pivot sort of lurking through here. Is this a day where you want to just sort of take a central pivot continuation play? Probably not. Why? Because it's at daily resistance. And to me, we're actually in the resistance now. We're right at the periphery of it. Okay, chances are London's going to want to do this. Might even break it marginally higher. Do you believe that trade? No. Because it's at daily, now let's say then, is that 45 minutes into London, you get this going on. You break these two previous little swing highs. Price does this. That's a good short right there. Break of the central, retest, off daily resistance. It's a change in pace. Okay, and we do something like this for 3 hours. Then London traders go and have lunch around 10:30, 11:30. They come back, which happens to be 6:30 New York time. They're like, oh, wow. Okay, well, we came back now and price is at the low. Is this a great place to sell it here? No, not really. So then price does this. It breaks a little bit lower. It makes a little move back here. And, 8 a.m. New York, you're sitting at resistance of the drop coming off daily resistance. So now New York's got an opportunity to do what London did, off daily resistance. And New York does this. Thanks. You might get news that kind of goes, no. And down we march. And then let's say you're sitting down here for Asia. Asia might go, yeah, okay, we'll finish the job and start reversing on itself. Right? Because what's in it for an Asian trader to get short right there? Nothing. There's no meat on that bone. So as a result, he's like, okay, well, sit tight for it finishes the job and then it reverses. And then you'll just have a choppy London. Why? Well, because you'll be sitting right in the middle. You're not really buying low or selling high, and as a result, London just chops. It's been happening a lot like that. For London to really excel, you actually want a quiet Asia. You want a busy New York and a really quiet Asia, and you'll get hot Londons. If you have good New York, good Asia, you're going to have, in all likelihood, pretty crummy London. Because Asia will take you to a zone that's maybe less desirable to trade in. Happens a lot these days. Just let them come out and then trade afterwards. If I'm in a trade, try to give it 15 pips of room. It just depends. But it's not, news is one of those things where I've always sort of acknowledged, but never really derailed what I'm trying to do anyway. And 90% of my trading these days is already done in these zones. I'm prepared to not trade for a day and a half, 2 days, just waiting for this. But the thing is that I'll locate these trading zones on 7 pairs. So when they're in the zone, I might have like 5 trades triggered. And I know here that I got the smallest amount of risk and the biggest amount of reward every single time. Looking at the euro pound right now. Look at the euro pound right now. Do we think that the euro is going to be stronger or weaker than the pound? Yes, Wiki. Do we think the euro is going to be stronger or weaker than the pound? Well, we're coming off support. The principal direction is down, but you're coming off major support. Yeah, euro is likely to do sort of something like that. Euro pound is likely to do this. Green zone, red zone. You'd like to do, euro is likely to be stronger for a day and a half, weaker, and then stronger while this shakes itself out. So over the next, and then you look at the shorter term stuff and you look at a euro pound 4-hour chart, you roll into the upside, test the divergence, you're about to break this previous swing higher, so it's likely to do this. So this is saying 24 hours of euro relative strength. Does that mean that the euro is going to be a rocket ship to the upside? No. All it's saying is that if you're going to buy dollars, do it relative to the pound over the next 24 hours, and then switch to the euro on Thursday. Yeah? So there's clues with major turning points, support and resistance on the crosses for you to trade your dollar pairs. Unfortunately, this is just the way it is in Forex these days. If you're going to trade the euro, you've got to know what's going on with the dollar index, the euro pound, the pound dollar, the euro yen. It's not straightforward in terms of the relative strength anymore. It takes a little bit of discovery, a little bit of work. But that's okay too. That's part of the fun. All right? Any questions, guys? Well, that largely depends. Okay, so let me answer these in order. For me, longer term is basically, for me, a longer term chart is a daily chart. Medium term, 4-hour. Shorter term, hourly. Longer term, weekly, daily, monthly. Now, a move sometimes can happen. I was expecting the euro to go from 127 to 133 over like a month period. Heck, it got most of that done in a day and a half. So, although I was expecting a bounce on a daily longer term basis, I didn't expect it to go 450 pips in 18 hours, right? So, turn into a shorter term thing of a longer term area. Made some money on that rise. Well, if you're trading off at 20 to 30 pips, that's a good question. If you're trading off, I'll answer. I got your question here in a sec, Boyke. If you're trading off a 20 to 30 pip area, it's unlikely that you're looking for a 30 pip trade. You're probably looking for 100 pips. Yeah, I'm not sure that gave you a satisfactory answer, Jason. If it didn't, please elaborate. Right. So risk reward depends on the quality of the trade. So typically, I'd like to have 1 to 1 or better. Typically, risk 1 to get 2. That's not always possible. Sometimes I'll even run in a little deficit if I think it's a high quality idea. And with the ranging nature of things, I've also learned that this market is behaving, or I'm doing way better letting things ride in the negative a little bit longer than I'm comfortable with. But when things trend, it's different. But right now we are largely range bound. So I'm willing to let them ride negative a little while longer than maybe, strict risk reward would dictate. But that's what's required right now. Principally visual support and resistance. 99%. Yeah, let me get to some of these questions on top. Yeah. Thank you for reposting your question. All right. If you could give example for your statement, if a change of trend trades directly into support and resistance. Okay. Yeah. So sometimes you'll have this sort of thing. All right. Let's say you have a chart that you might have this sort of thing going. You have a zone where you want to sell, and price has been doing this. It cruises up into your sell area. Yes, I do, Boyke. I'm a big believer in taking profit. I'll tell you why here in a sec. I'm running out of time. So if I have this sort of thing going on, right, let's say price does this. Okay. The problem with this scenario is that it's just traded into a green zone. So let's say, so now which one do I believe more? The resistance or the support? Now let's say, obviously it's got to be in context. So let's say it's been in a big down move like that. All right. So now the change of trend has happened, but it's come right into a support zone, which happens a lot. Now it bounces back to resistance. Okay. And you get short here. Right, this is where I see a lot of people get hurt the most. Now, which one do you believe? It's been on a longer-term downtrend, but it's also made a little change in trend to the upside. But now I've come off resistance right into support. You're like, huh? And incidentally, this is how ranges are made. Okay, if you're going to short this, you're going to be aware of it. Maybe just doing this sort of thing, change your direction and cruising aggressively to the upside. So if you short that, it's a good idea to aggressively protect that trade with maybe a break even or, a stop just above the higher high or something. Because this could happen. You just pick up the higher low and off you go to the upside. All right, so that's what I mean. I prefer a scenario here where, you might have this sort of thing going on. and then you're shorting that. That's great because you haven't hit a meaningful support. So this one, I'm much happier taking that trade. Where the one, if it makes this little change of trend price action-wise into support, you can get hurt. You see, the thing is with the trend trading is fantastic. It's wonderful. But you're only trending about 30% of the time. The other 1% is I use pivots, use stochastics, some EMA stuff. But everything's surrounded by sort of daily support and resistance. That's 90%. All right. And if I've missed your question, guys, I'm out of time. I sincerely apologize. You can follow me at Forex David on the Twit. It's also a good place to email me. Okay. Otherwise, I'll catch up with everybody next month unless something comes up earlier. Okay. Good luck, everybody, and thanks for attending. And we'll chat to you soon.